Hey guys, Gregory Joseph here. Welcome to Wall Street Weatherman. And maybe the biggest news of this week was Netflix offer or accepted offer to buy Warner Brothers Discovery. And I've been looking at this stock because I've traded it in the past, and recently, in about the last 5 months, it's come back down. It's come in about 25%, which really started to get me interested because it's a fantastic company in so many ways, and we've talked about it before. But this merger, is that going to get me off the bench and pull the trigger and make a buy or not? Do I think it's the right time for that? Let's run through a few of the deal points, how this all happened, and then we'll talk about whether or not I'm going to buy this stock. So, how this all started was Warner Brothers got an unsolicited bid from Paramount, uh, and Paramount. So they responded to that, but then it was made aware. Netflix was made aware of this as well as Comcast, and so Comcast and Netflix both put in competing offers, and then the bidding was back and forth, and it all went crazy, and it all went very fast too. Warner Brothers set up a war room in New York City in a hotel, and it was all very sort of covert, and they had even had code names for the three bidders: Noble, Prince, and Charm. Noble was Netflix, Prince was Paramount, Charm was Comcast, and so it really sort of added to the intrigue there. But anyhow, so it all came about with this offer from Paramount, but the Paramount offer was ultimately rejected, and the whisper on Wall Street right now, according to Bloomberg, is that the Warner Brothers had some doubts about Paramount's ability and likelihood to be able to close the deal, even though it was fully backed by Larry Ellison of Oracle and also some investment funds from the Middle East. Now, Larry Ellison is the father of David Ellison, the CEO of Paramount. So even with those guarantees, Warner Brothers said, no, we like Netflix's offer better. So the accepted offer from Netflix was $72 billion. 59 billion was in cash. The rest was in Netflix stock. And Netflix gave a breakup fee of $5.8 billion. So for any reason this deal does not go through no fault of Warner Brothers, no interference or anything like that, Netflix is going to owe Warner Brothers $5.8 billion as a breakup fee. I don't know if I've ever seen a breakup fee that size, but again, the murmur is that that definitely had something to do with it, and also the funding of Netflix and the confidence that they were going to be able to close the deal. So what Netflix got is or they're going to get if they close the deal is they're going to get the Warner Brothers movie studio, they're going to get HBO and all of the intellectual property, all of the content, which includes things like the Game of Thrones series, Harry Potter, lots of an incredible library for them. But Warner Brothers is going to keep the news and the sports part of the business. So that's going to be spun off. And so that should increase Netflix's subscriber base by almost 50%, a little more than 50%, and give them a worldwide market share of streaming of almost 60%, which is crazy, almost 60% worldwide. So now they are in escrow, which is, the period where the deal's done from there until when it closes. In that time, let's talk about the obstacles to it. There are three big ones that I flagged. One is Paramount. Paramount is, in my opinion, probably not going quietly into the night, and we'll talk about that. The second one is the government, our government, and the European Union, our Department of Justice, and also our Federal Trade Commission, the FTC, are going to be looking at this, as well as the European Union, and they are notoriously uh, strict with their evaluation of mergers. And so the third possible obstacle are the shareholders. The Warner Brothers shareholders are going to have to vote for this. So it needs their ratification as well. So um, the Department of, oh, and Paramount, by the way, Paramount has already put out there that this has been a tainted process, and I see absolutely lawsuits coming from the Ellison family. Um, just a feeling I have. Larry Ellison is a tough guy, does tough business, and let's just say he's not afraid of a lawsuit. And the other thing that Paramount could do is they could put in a hostile bid. They could try to convince the shareholders to sell their shares to Paramount so Paramount gets a controlling stake, and then they've got a hostile bid which would be controlling and be able to control the vote of the shareholders. The second thing would be a proxy fight where Paramount goes, uh, you know, on the PR campaign and tries to convince the shareholders to vote no on this. So that's the Paramount part of it. The DOJ, FTC, Department of Justice, Federal Trade Commission, they're going to be looking at, is this an anti-monopoly? Is there anything anti-monopoly about this or monopolistic about this? Because that is their main criteria. Does this form a monopoly or is this going to be approved and be anti-monopolistic, if that made any sense? But the two big things that they look at are, is this going to raise prices for you and me? And is it going to result in higher prices? And is it going to result in less competition? So those are the two biggest criteria that the DOJ and the FTC look at. And then the other thing that I want to point out, and in this day and age, it becomes more and more of a factor, is relationships. The President of the United States has a strong relationship with the Ellison family. Earlier, in an earlier video, we talked about the Stargate project with data centers and Oracle's involvement and the Ellisons. So there's a strong relationship there. And on the other side of things, there's been the relationship with Netflix has been contentious with the president. And Reed Hastings was one of the co-founders of Netflix. He has given a lot of money to political opponents of the president. Also, Netflix has done several deals with the production company from the Obamas, producing some of their shows. And so, in this day and age where those relationships play more and more into business, I'm really keeping an eye on those. And then the relationship with Hollywood, the industry, the business, that Hollywood, the initial reaction is that they're not in favor of this. The way that they see it is that theatrical releases, when films get sent to the theaters to go for their theatrical release, that window, that how many days, how many weekends that they show would be limited because Netflix would pull the movies sooner to get them onto their streaming platform to monetize them there. So generally, it looks like the industry might be leaning more toward the negative. So that's a lot. Those are a lot of relationships, that a lot of headwind for Netflix in closing this deal. So good news. Well, one piece of good news is that there is a government agency, the FCC, that's not involved, the Federal Communications Commission. They're not involved because this doesn't involve a TV subscriber. I mean, broadcaster. This is streaming only, so there's no broadcast involvement, and so the FCC is not a part of this. So maybe that's a positive. Who knows? Now, let's get down to it. Is it time to buy Netflix again? I think it's an incredible company. I think they have such a moat to the streaming competition. And I love YouTube, but that's a little bit different. And they've really got so many great things going for them. And again, the stock has pulled back. It's lost about a quarter of its value. So I was already getting interested in it. But you know what I've really emphasized in the past. You do all of your due diligence, you look at the financials and the competition and the leadership and the business model, all of that stuff. But at the end of the day, before I buy, is it a good time to buy? Do I feel that? And I gotta say, overwhelmingly right now, I'm a little bit disappointed because it was getting so interesting to me. But with this merger, I'm anticipating at least a year, if not a year and a half, of this being bogged down in federal review. And that right there, I am not willing to put my hard-earned money on the table to wait it out for the possibility of a yes or a no after a year or 18 months. So it's kind of crazy because leading into this, it was just Netflix as a company and they were looking so good. And, I was feeling like my opportunity was coming on back in but it's time to reset. And that time value of tying up my money for at least a year, in my opinion, if not a year and a half, I can't jump in. And again, pointing out all those headwinds, I just think that there's just a lot of risk, that has presented itself as of late. So unfortunately, I'm going to pass on buying more Netflix. And so uh, I hope that helps you. And one other note that I had was that Wall Street hates uncertainty more than almost anything. And to be in limbo for a year, year and a half, I don't see that reflecting well on the stock price. I don't. It might go up, but again, people who are going to buy, maybe people like us, are going to now sit on the sidelines. So Wall Street hates uncertainty just like I do. And so there's an extra factor there. And as a reminder, as always, all content herein and information views expressed are informational only and not advice to buy or sell any stock or equity. All right, guys, I hope that's been helpful. I really have been, I'm a little bit bummed because I've really been looking at Netflix and this is sort of, well, it's turned my opinion. So we'll see where it all goes, see if it does get approved or not. And there we go. So as always, thank you for watching Wall Street Weatherman. I'll see you again soon. Cheers, guys.